kicking off the week in comeback mode. The big three indexes all up more than 1%. The NASDAQ 100 popping 1.7%. But get ready, your next guest is warning something nasty under the surface may bring on more volatility and possibly selling. Julian Emanuel is BTIG's chief equity and derivative strategist. Joining us now, Julian, what are you seeing that makes you a little concerned?
Well, if you think about the last couple of weeks, you basically had an August that the setup was very much public positioning. Obviously, we saw institutional players came in that really brought the market higher, along with higher option market volatility. Volatility has moderated, but the option market is telling you that the public is still very heavily involved in the market and that the froth likely has to come off. And the proof of the pudding there is in option skew. Out-of-the-money calls are historically expensive versus out-of-the-money puts, particularly on the high-flying stocks. We need to see that relationship normalize a bit more. Second thing we're seeing is if you look at the volatility environment itself, you know, a garden variety pullback over the last several years with a VIX that was ranging between 15 and 20 would have been 7%. We're off 7% or so, but it's a different environment with the VIX ranging between 25 and 30. So it's only logical for us to view, given the positioning, that there's more pullback to come. And of course, for us, the last thing is the election. The uncertainty of the election is only likely to build between now and then. Markets tend not to like uncertainty. And for us, that is just another signal that, rallies for the meantime are probably selling events.
Julian, it's Karen. Let me ask you something. If we were to see a stimulus, which I guess is hopes fade fast every day, but if we were to, does that change your view of this market?
Yeah, it does, Karen, because if you think about the last several weeks, I think investors have more or less transitioned from the pre-Labor Day idea of $1 trillion stimulus before the election to the notion that there isn't likely going to be a stimulus until after the election. And if that were to materialize, that would certainly be a positive in this environment, particularly when those funds would go directly towards trying to really aid in the economic reopening, which again is really one of the largest open questions that we have looking over the next several months.
Hey, Julian, it's Dan. Obviously, mega cap tech really led to the upside over the course of the summer, driving a lot of the gains in both the S&P and the NASDAQ. It obviously led on the way down over the last couple of weeks. Really interesting price action today on the close. Amazon, Facebook, Google close on their lows. Apple in front of their meeting tomorrow closes on its highs. What do you think, what group leads the market lower here? Are we expecting more sellers on every rally in some of these mega cap tech stocks?
Yeah, this is big tech. If you look at it, you know, whether you call it the work from home names or the COVID names, big tech was obviously, you know, topped out a couple weeks ago, the 5 at over 24% of the way to the S&P 500. They're just over-owned, and when you look at it in the context of the great run they've had on fantastic earnings, a lot of these names have subdued earnings expectations for next year that, you know, really don't justify this elevated multiple right now, especially if the economy is likely to accelerate, where people will be looking for beaten down names in areas like financials and selected healthcare.
Julian Emanuel, BTIG, calling for potentially more volatility and selling ahead of the election. I know we're going to get more in a second on the options side. Julian, thank you very much. Guy Adami, your take on what Julian had to say. We're 50 days out until that election. Hard to believe. But, man, when you read some of the polls and numbers, I mean, you can understand why volatility is going to be a concern.
Yeah, and despite the fact that vol has come down significantly, I mean, we talked about volatility last week and we had a 36 handle. Obviously, we closed 10 handles lower than that. But it's still heightened, and I do think the market is underestimating the volatility that's going to be accompanied with the election. And to earlier points we made, I think the U.S.-China rhetoric is going to continue to get ramped up. So despite the fact that the market had a nice day today and vol has come in, you're still talking about a 26 VIX, and you're still talking about an S&P 500, which is right around that prior all-time high of 3390 we made back in February. So I'm sort of in Julian's camp.